Hi, everyone. The uncertainty the world faces today due to the COVID-19 pandemic is causing so many things to change. The way we interact, the way we do business, and the way we buy and sell real estate. Today, I wanted to take some time to talk about the results of a recent NAR Flash survey, which is a survey of real estate agents across the country. The results will provide some insight into how buyers and sellers may be feeling about home values in today's market. I will also provide some historical insight that can hopefully help us gauge where we might be headed based on past experiences. In the NAR survey, agents were asked the two following questions. 1, have any of your sellers recently reduced their price to attract buyers? Their answer, 72% said their sellers have not lowered prices to attract buyers during this health crisis. The second question, are home buyers expecting lower prices now? Their answer, 63% of agents said their buyers were looking for a price reduction of at least 5%. In today's market, with everything changing and ongoing questions around when the economy will bounce back, it's interesting to note that some buyers see this time as an opportunity to win big in the housing market. On the other hand, sellers are much more confident that they will not need to reduce their prices in order to sell their homes. Clearly, there are two different perspectives at play. Now, because of the recent major drop in the GDP and the decline expected in this quarter, there's going to be a lot of recession talk. Are we in a recession? A recession is defined as a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 consecutive quarters. Understand that if you're looking to move forward with a real estate transaction in 2020, the word recession shouldn't scare you. Recession does not equal a housing crisis. As a matter of fact, let's look at what Doug Brien, the CEO from Mind Property Management, said recently. With the exception of 2 recessions, the Great Recession from 2007 to 2009 and the Gulf War recession from 1990 to 1991, no other recessions have impacted the U.S. housing market, according to Freddie Mac Home Price Index data collected from 1975 to 2018. So they did research, and results show that recessions normally don't impact the housing market. This is shown in the next graph. Let's make sense of this. In 2008, because the housing market and the mortgage market meltdown had a major impact on the economy, prices fell 19.7%. But just like the research done on the Freddie Mac Home Price Index, this is on the CoreLogic National Home Price Index, and they found the same exact thing. 2 out of the last 5 recessions had drops, but in 91, this drop did not have a dramatic negative impact. As you can see, 3 of the last 5 recessions actually saw prices appreciate. The rapid decline in prices in 2008 reflected the fact that the housing market was the primary cause of the recession, which is not the case today. So, is this going to be like 2008? Let me go into a bit more detail on this. First, let me start with a quote from Mark Fleming, the chief economist at First American. He says, "Many still bear scars from the Great Recession and may expect the housing market to follow a similar trajectory in response to the coronavirus outbreak. But there are distinct differences that indicate the housing market may follow a much different path. And while housing led the recession in 2008 and 2009, this time it may be poised to bring us out of it." So what do we know here? We know that in 2008 and 2009, the housing market was at the epicenter of the downturn of the economic slowdown. And what we know today, entering into this year, the strength of the housing market is well positioned to bring us out of it. So let's go back and take a look at the housing crash of 2008 and the stock market correction. When we look back to 2008, we can see that the S&P went through a correction of about 51%. And through that time, in 2007, 8, and 9, home prices depreciated as well. Really, over the 3-year period, a cumulative depreciation of about just under 20%. And that's what we remember. That's what consumers, anybody that lived through this in our business, we remember that. And yet when we start to take a look at what's happening today, we start to see a different picture. I want to share this quote from economist Dave Rosenberg. And it says, "What 9/11 has in common with what is happening today is that this shock has also generated fear, angst, and anxiety among the general public. People avoided crowds then as they believed another terrorist attack was coming and are acting the same today to avoid getting sick. The same parts of the economy are under pressure. airlines, leisure, hospitality, restaurants, entertainment, consumer discretionary services in general. Very similar to what we're seeing today, our economy has been put on pause as people are self-sheltering in place during this time. So, when we take the same approach to the dot-com and 9/11 crash, we see a different picture. We see an S&P correction during that time of about 45%. But during the same time, in 2000, 2001, and 2002, we actually see home price appreciation during that time. So a very different picture from 2008 than what we saw during 9/11. So, looking at the results of the NAR survey, are buyer expectations of a greater than 5% price decrease reasonable? I think it is important to determine which of the last two recessions will apply most to what we are seeing today. While I cannot predict the future, I can say with some certainty that today's market is not like 2008. Specifically, in relation to home price appreciation leading up to each recession, mortgage credit availability, inventory, and home equity. In the coming days, I hope to provide further insight into these. While buyer and seller motivation will vary, in general, I would not expect an overall decrease in home prices at this point. While the market has been put on pause to some degree due to COVID-19, once this health crisis becomes more manageable, I do expect the market to recover quite nicely. With that being said, even though the economy has slowed down, there are still people that must buy or sell their homes for various reasons. The way we buy and sell real estate is ever changing these days, but transactions are still being closed. If you need to buy or sell in the short term and are looking for advice or have any questions on how to move forward in today's environment, please reach out. Thanks for listening.